Okay, so we'll start with the 2014 paper. Okay, 2014 question number 1. Okay, the following information pertaining to a hypothetical economy for a particular year is given below. Private consumption, government purchase, import, domestic private investment, foreign factor income from abroad, changes in inventory, depreciation, exports, factor payments to abroad, purchasing of raw material, purchases of shares and bonds. So the requirements that you have is number 1, construct the aggregate demand equation. Number 2, calculate gross domestic expenditure GDE. Number 3, calculate gross national expenditure GNE. And number 4, calculate net national expenditure. I think there is 12 marks there, no? So 12 marks for a simple calculation. And I think that's all that they have. So we can quickly finish this off. Now they're asking you for the aggregate demand equation. Yes, can you all tell me the aggregate demand equation includes what and what and what? AD is equal to what and what and what? Consumption, investment, government spending, and net exports. So how much is that then? So consumption, now remember they are only asking you for the equation. Huh? They are not asking you to calculate and find the final value, nothing. So consumption is how much? Private consumption 800. Investment, they have said domestic private investment 200. Government spending they are saying is 150. Net exports is exports minus imports. How much is that? Exports are 80. Imports are 60. So this is your aggregate demand. Guys, can someone check with your past paper book answer as well? They have not solved it, right? They're asking for construct the aggregate demand equation. So as long as you give this, it should be enough. Can you just reconfirm someone? In your past paper book, have they gone and like solved this and simplified? No, right? Can you quickly check? I'm hoping you all have your past paper book and your answers and all right next to you, and you're not sleeping in bed and just listening. Can someone check quickly? Yeah? No, not solved, no? Right. So this is what it is. So can you see it's a very simple question, no? Construct the aggregate demand equation. So aggregate demand equation is P plus I plus G plus NX. So means it has only this. So they are not asking you what is the aggregate demand. They ask what is the aggregate demand you have. Yes. So these components can you all write the full form. Don't just say C plus I. So say private consumption, private investment, government purchase, net exports, or say exports minus imports. You'll write the full one. Okay. Then part B. What is part B of this question? Calculate GDE. Part C, GNE. Right. So GDE. How do you calculate GDE? Very simple, no, guys. GDE is private consumption plus investment plus government spending. So how much is that? Are these even questions? No. Private consumption 800, investment 200, government spending is how much? Government spending is 150. Now the question, guys, in this investment, do we have to add changes in inventory and depreciation? Do we have to add that also? Now, when you say investment, it means, so inside investment, no? So what do you think? Do we have to add changes in inventory and depreciation or not? Or is that also already inside this 200 that is there? So since they have given us, now this is the old format. Now usually in the new format, they will say gross domestic capital formation. So what do you all think? Now since they have given this as a broader heading, now if they say something like net investment, then you can assume that this changes in inventory and depreciation is not there. You can add it again. But since they have told us domestic private investment, it's like the total investment. So therefore, Don't go and add changes and inventory and depreciation again. It's already inside this. So how much is our value then? GDE is equal to 1150. Yes, in case whatever that I'm explaining is a little different from your past paper answer, let me know, because these are a little old terms. So in case there is a difference, just let me know. Then the next one, guys, is to calculate gross national expenditure, GNE. Yes, how do we do this? Now we have GDE. Can you tell me? Yeah, you can say AD minus NX, but that's not the most ideal one. Okay. They've added factor income. But GDE, they can't add factor income. Okay. So GNE, what is GNE, guys? Gross national income. Sorry, gross national expense. So can you tell me if this is correct? GDE, okay, gross domestic plus net primary income equals GNE. Is this correct? From G to GDE, domestic to national. Remember, domestic national is net primary income. So GDE plus net primary income equals GNE. Yes or no? This is wrong. Remember, you can't go from GDE to GNE directly. You first have to go to GDP and then you can go to GNE. So to GDE, you first have to add net exports, then you will go to GDP. To net exports, you add net primary income, then you can come to GNA. Remember this, guys. Okay. Now, usually some of you all will think as a domestic to national, what we have to add is net primary income. So gross domestic expenditure to gross national expenditure, I can add net primary income. But from GDE to GNE, you first have to add net exports, go to GDP, then add net primary income, then only you can go to GNE. This I taught you all in the fast track. There was a MCQ with this question for those who remember. I told you, you can't directly go there. No, GDE and GDP is not the same, guys. Come on. Expenditure approach. Remember, consumption plus investment plus government spending is equal to GDE, gross domestic expenditure. To this, you add net exports, you get GDP. To GDP, you add net primary income, you get GNI, or you can call it GNP, or you can call it GNE. Yeah, this is the way, right? Come on, these are very basics. Okay, so then, okay, so they have given an alternative answer also for part B by adding depreciation. Can be, because here they are not very clear. No? Here, when they say domestic private investment, they are not clear whether this is gross domestic private investment or net domestic private investment. So if it is net, you can add the depreciation part also. If it is gross, you can give. That's why so this is the previous way of calculating. Nothing, not big has changed, but now in our syllabus, they will not give it like this. They won't say gross private investment. They will say gross domestic capital formation, or they will say net domestic capital formation, or they will say gross domestic fixed capital formation. Remember the terms inside that. So now they will use those terms. Now they are not going to call it domestic private investment and all of that. So have those in mind. So according to my example, guess how much is not my example. Past paper, how much should GNE be? GDE 1150, or you can take 1190 if you add depreciation also. Plus net exports is how much? Exports are 80, imports are 60. So 80 minus 60 is net exports. How much is net primary income in my example? What is the number for net primary income? What's the number? Quickly. Factor income from abroad is 40. Factor payments to abroad is 60. So how much is my net primary income? Is it 20? Is it 40? Is it 60? How much? It's not 20. It's a minus 20. Remember, net primary income is primary income received minus primary income paid. So primary income from abroad 40, you have received 40, and primary income paid to you have paid 60. So that means your net primary income is a minus 20. If you go and put 40 there, if you go put plus 20, it's completely wrong. So net primary income is primary income received 40 minus paid 60. So you solve this, you get G and T. Can someone give me the number, guys? So 1150, here this is a plus 20, here this is a minus 20, GNE is also 1150. Okay, that's gross national expenditure. Do they have anything else? They also have net national expenditure. So how do you go from gross national expenditure to net national expenditure? NNE, how do you do this? This is very easy, guys. Gross to net, what did we learn? How do we go from GNE to this thing? You minus depreciation. And now in your paper, they won't call it depreciation. They'll call it consumption of fixed capital. So you minus depreciation, you get net national expenditure. So GNE is 1150. From this, if you minus depreciation of how much? 40, you get net national income 1110. So this is an expenditure approach calculation from the 2014 paper, a very easy calculation. They're giving you 12 marks for this. So remember, because 2013 was a very difficult paper, they made 2014 very easy. So they're giving you 3 marks, 3 marks, 3 marks, 3 marks, right? I did all of it in one slide, even though it's 4 different questions. So you need to know. And what are the new things that you need to know? Now, if they ask you the same question, depreciation will not be called depreciation. It will be called consumption of fixed capital. They're not going to give you something called domestic private investment. They will reword it as gross domestic capital formation. Inside that, you will have gross domestic fixed capital formation, changes in inventory, right? Changes in value, all of that will come. Those are changes. Consumption, government spending, imports, factor income from abroad, exports, these are all the same. Yes, what about these two? Purchase of raw materials and purchase of shares. Where do we include this? Under which approach? Purchase of raw materials, purchase of shares and bonds. Now, all the other information is for expenditure approach. The last two. Under which approach do we add these two? Under which approach? Under no approach. These are not included in GDP. Purchase of raw materials, intermediate consumption. No. Purchase of shares, purely financial transaction. No approach will include these. So these are just given to confuse you, to see whether you will add or do some nonsense. Yeah. So be very careful. Okay. That's it with the 2014 question, guys. 2014 question, there is only half a question. That means the remaining parts of this question will be from unit number 6, which we will do maybe the week after. Okay, right. So that's done.